Good afternoon, this is Dan Howe, PTI Securities and Futures, coming to you for your Monday, August 8th daily wrap-up. Today was an absolutely horrible day. Yesterday when I started out, I heard the news of the S&P and I went to the futures. I found out that the Israeli market opened down 7% and there was some sort of indication of what was going on. Overnight, the Asian markets closed down 3 to 4%. The European markets were down 1 to 2. The S&P downgrade was the big news. Obviously, a lot of sniping back and forth with the government whether it should or should not have been done. There's an awful lot of people out there that are on both sides of that fence. It is kind of interesting that they basically didn't do anything for some other national debts like Belgium, whose cost to insure went up quite a bit last week, and obviously we're now on a worse footing than France, which makes no sense. But realistically, going forward, we have to deal with this. During the course of the day, S&P was active again. They put Berkshire Hathaway on credit watch. So obviously that they're going to be a little bit more active. Maybe they should have done this a couple of years ago, but they're doing it now. We sold off during the day. It got worse as the day went on, had a mild rally towards the end, and then sold off even hard to make new lows on the close. The SPX closed down 79 and 11.19. Selling continued after 3 o'clock, and the S&P futures closed down 86, so it's actually a little bit worse than the SPX would indicate. The Dow closed 634, down 809. The NASDAQ closed down 174 at 2257. And this is the interesting thing about it, is the bonds rallied all day. So here we are supposedly in having trouble because the U.S. bonds are going to be in debt watch. And the bonds rallied significantly. The 10-year note closed down 21 basis points to close at 2.33 yield. So obviously the market didn't think that the treasuries were no longer a safe haven. The dollar rallied. Once again, interesting. If the U.S. is having problems, why would the dollar rally and the bonds rally? But the dollar rallied up 0.21, so the index closed at 74.75. Really, our hope for the week is tomorrow. We got the Fed meeting, and the Fed is really the only people with the bullets. Obviously, the President and Congress really don't have anything to do at this point. The Fed hopefully will say something in their statement tomorrow to lift spirits, and maybe we can get a little bit of a snapback. During the course of the day today, we rolled down some of our puts for our program people that actually went into the money. The S&P, we rolled down $10. Some of the other indexes we rolled down a little bit. And then what we're trying to do is do out-of-the-money calendar spreads, because the volatility differential was huge. There was a 9 or 10 point volatility difference between the weeklies that expire this Friday and the regular August that expire next Friday. September to August was also a 7 or 8 point differential. So if we did out-of-the-money call calendars, if we do happen to creep back up, this could be very good for our clients. They're cheap shots. They were 20 to 50 cents, so you might want to consider them. It's been Dan Howe, PTI Securities and Futures.